All right, gold. Let's go over it. Okay, if you go to daytradingthefutures.com, www.daytradingthefutures.com, we play a lot of these videos, record a lot of these videos. We get over 300 videos now for you to see the same exact setups that's been working for 31 years. And we have a shark on there. Hey, Matt, we have a shark for our emblem. And the reason we have it on there, when we first came out with the trading room, I used to page traders on their emails when this setup came up. And this setup is just a beautiful setup that's worked ever since I've been trading. And it's just a gorgeous looking setup that's a snapback setup. It's called a rubber band. I used to call it a rubber band when I wrote my book earlier in the day, or I called it a snapback trade. And it's just a gorgeous setup. Let's look what happens to it. It called the high in gold this morning for us, and it was $500 per one contract potential, $500 potential trade per one contract with a maximum risk. It came out to maximum risk of 130 bucks. So what you want to do is the trend filters down. So when the trend filters down, the most important, we have two moving averages on here, and the moving averages are only used for trend direction. That's the best way to use them. I do like using this longer term moving average on the first retracement to it after a cross of the smaller moving average to show a continuation. And you can see that the smaller moving average, we had a cross. I mean, we had a really big spread between the two. And here's why we need this, the shark bite trade. What happens is a smaller moving average, these are great for trend direction. It goes vertical and away from the longer term MA, the magenta MA. You can see when it goes vertical away from it. And once it starts going vertical away from it, you want to watch for big 5-minute bars up. Once you start seeing big 5-minute bars up, it's going to catch all the wrongly positioned traders. Hey, Terrence. And this was the overall setup that we look for. We want to see big, giant 5-minute bars coming up into resistance. So right here is high value area. Now, we know that my methodology states very simple. If we're in a downtrend, trend filter down, we sell the first test of high value area. So when it comes within 2 ticks, sell the first test of high value area with negative market delta. So when it came within 2 ticks of 1367.50, you very simply wait for negative market delta. Here it is. It called the high to the exact bar. There's your negative market delta. So you wait for negative market delta to pop you in the trade. Now, it's called a shark bite because if you look between the moving averages, you know, a lot of traders call it the seagull trade, but if you look at it, it looks like a shark opening its mouth, big, wide opening. You'll see the big hook right there. You see it hooking. That's because these big 5-minute bars up. And then you'll just see the market crash down. And this trade is notorious for going from high value to low value or from low value to high value. I came up with a name for it. It's called a coast-to-coast trade. I call it coast-to-coast setups, meaning high value to low value or low value to high value. So when you get to high value and you get short from negative market delta, your target is all the way down to low value. So that was over a $500 trade potential, and it happened relatively quickly on that setup. It's called a shark bite trade. And like I said, the easy way to see when it's happening is if that angle, the magenta angle is down, your longer term MA, and the smaller one gets out of whack, meaning you'll see it, you'll see big 5-minute bars down, big 5-minute bars down, right? And that's going to create that moving average to go vertical, smaller moving average to go vertical. And then you'll see big 5-minute bars up, 5-minute bar up, 5-minute bar up. And that catches all those wrongly positioned traders. We sell right into it, and the market crashes down. Very easy trade to see, and a very, very profitable trade this morning on crude and gold. All right, let's go to crude, Gerald. Let's take a look at crude then. Crude has the exact same setup. If we roll over to crude, if we look what happened, the same exact scenario. If I look on crude, what happened this morning is you can see that the smaller MA got out of whack again. The sell got out of whack right here, meaning you see it going vertical away from the longer term MA, and you get that hook. There's that hook pattern. And what happens is you see these big 5-minute bars down. Look at that huge 5-minute bar down. That's catching all the wrongly positioned traders. Catching all the wrongly positioned traders going short. It comes down to my low value area. Now my methodology states, what's my methodology state? Very simple. By the first test of low value area within 2 ticks, it comes down within 2 ticks of low value area. I get positive market delta. What's it do? It goes coast to coast, LVA to HVA, target hit. Now, if you look, I had confluence on these trades. The control point was right over top. These solid lines, there's a blue line that comes up here. And this happens a lot on shark bites. You'll see the control point right over top of it. If I look at my control point, is directly almost top of my LVA for confluence. Now go back to gold, Gerald. Look at gold. Gold, my control point, my blue solid line is right on top of the high value area. It does not get any prettier than that. That is just gorgeous. Absolutely gorgeous. So that's I call it I used to call it, when I originally came out, my rubber band setup or my snapback trade. Because what happens is, if you look on gold, imagine you taking your left hand at this low of this price bar, and you have a rubber band and you stretch it with your right hand all the way up to a high value area. And then you let go of that rubber band. What's it going to do? It's going to snap back to originally where the rubber band started out from. And that's how shark bite trades work. It's a gorgeous setup. We've been doing it ever since we opened the room. It's one of my favorite setups to look for in a retracement trade. It works excellent at high value, low value area.